Hello, it's Richard Bowser here from Property Investor News, and welcome to our latest PINCast. So this morning, I'm delighted to be joined by a long-standing friend and business associate in Helen Chorley. Good morning, Helen.
Good morning from Malta, Richard. How are you?
I'm fine, thank you. A little bit chilly here in North Oxfordshire, but we're looking forward to some sunshine in a few months' time, as I said earlier. So for those who have not been reading Property Investor News in recent years, just to clarify that Helen Chorley, who is, as she says, a Malta-based investor, has been writing fairly regularly over the last 3 or so years for us. And actually, I did an interview with Helen back in early 2020. So literally 4 years ago, just
Yeah,
before, of course, the the awful pandemic hit us.
the world changed. Yeah,
Yeah. So Helen, we talked in that article some 4 years ago in that interview about yourself and your career background. So just remind viewers and listeners to this about who you are and what you do as an investor in property.
sure, absolutely. So, my background is investment banking, and I came into property from that background. So, came with a pot of money, and I kind of believed that I could be passive, or I could do passive. I could hand over my money to developers and go off and live, in the sun in Malta and live happily ever after. And as we both know now, we all know now that's not quite how it's worked out. I can't do passive for a start. And actually, what I realized is that I could bring a lot from my background into kind of the world of property
Yeah.
and help people as well. So I'm also the co-founder of Property Sisters because we
Yes.
realized that there was a community needed to support female developers. So we've got Property Sisters, and actually for newer people just on the journey, we've got Little Sisters as well now. And then obviously we've done a lot of work together, being judges for Property Investor Awards. I'm a judge for the Women in Construction Awards with Michaela Wayne. I've done numerous seasons of Property Elevator. And then also recently done Venture Visionaries, which is more about venture capital with the lovely John Reynolds. So yeah, done some TV and podcasts, and I most recently hosted Property Investor Awards back in December in London
Yeah.
and absolutely loved that. So yeah, but involved in lots of different ways in property and investment and construction.
Yeah. Well, as you say, we've been working as judges on the Property Investors
Yeah,
Award now for good few years now, as I recall.
yeah,
Yeah, I think I'm struggling to remember now. I think it's 2014 that started. So time flies by. Some great entries this year, and some obviously some brilliant um, the projects that were put through, and some very worthy winners this year. So yeah, look.
yeah, there
Yeah,
was.
yeah,
Sam Patel swept the board with 4 awards, which we've never had before.
absolutely.
But lots of really, really worthy winners, and lots of women, and lots more women entering and putting themselves up for awards, which is what I particularly love to see as well. So it's great to see, we both enjoy it as much as each
Oh,
other, don't we? Just
yes.
understanding what people are doing and seeing how creative people can be with these projects.
Yeah. Well, actually, I'm actually meeting Sam next week at one of his
Great.
projects, one of those that won one of the awards, because you say he won multiple awards this year.
Yeah.
And in that interview and that article, we'll be going into the upcoming magazine. So looking forward to
Oh,
seeing that. Obviously, I know quite a bit about it, having judged, like yourself, some of the entries, but
yeah.
looking forward to seeing it in the flesh. So so
Oh, yeah.
so yeah. So I mean, you've been investing as as an investor, direct investor into other people's projects, haven't you? That's
Yes.
basically where you come from.
Yes.
You're not wielding a pick and a shovel on a site,
No,
thankfully.
that's not my area of expertise. I leave that to the people that know what they're doing. Yeah.
So the key skill sets that you bring from your career in investment banking, how would you summarize that, and what enables you to do what you do in terms of property investing?
Well, obviously with banking as my background, numbers is very, that's the key, the what I'm really keen on
Yeah.
and understanding. I'm a, self-confessed spreadsheet geek. I love looking at the numbers and understanding when you change numbers, what happens to the overall look of the return. And also what I did realize, and actually how I got into that kind of speaking and presenting and everything, in the property circuit, was that I had an attitude to risk that I wasn't hearing other people talk about. And I mean, a lot of people were talking about kind of strategies and different things you could do, but nobody was really speaking from the investor's standpoint. The investor being, kind of a private investor who kind of
Yes.
lends money or goes into a JV.
Yes.
But also like that way, that attitude to risk. And what I realized was people didn't often completely understand all the risks they were taking. So that's what I'd say the two main things are.
Yeah. Obviously, yeah, no, quite. So yeah, I mean, it's yeah, generally speaking, as we know, a little bit like yield or whatever. You know, the more the greater the potential return, the more likely it is that there's a greater degree of risk involved.
Yeah.
And just straightforward. Investing in central London against investing in some remote part of the country where there's a very weak economy, but potentially there's a good deal. But obviously
Yeah.
it correlates to the risk, doesn't it? Yeah. So okay. So what Helen? What sort of projects do you typically investing in a given year?
To be honest, I don't have like I don't set out with I want to do this deal or I want to do that deal. I very much base it on what the developer that I'm working with, what their expertise is. So I've kind of done a bit of everything really. Flips, I mean, we've got a land deal on at the moment. I've done loans, I've done joint ventures where it's equity rather than
Yeah.
a loan, just a kind of fixed rate. So I've done lots of different types of things. And actually, as definitely we've talked about, and I think I've written about in the magazine as well, like my risk appetite and the risk that I will take over time has changed as well,
Yes.
because I really believe in, I've definitely written about this, kind of earning your right to risk. So you don't plunge into something, super risky as your first deal when you don't know what you're doing and you put all your eggs in one basket. I strongly advise against that. I have seen people do that and it doesn't tend to work out too well. You can get the odd lucky break, but it's not something I would really recommend, to be honest. So it really depends what the developer's expertise, and if I've got confidence that they can deliver what they say they will deliver, then that's where I will begin to look and take a project seriously, and then look to do more assessment on the numbers, whether it's the right type of deal project for that area, what the exits are, and look at all those, really get into the minutiae of the deal then.
Hmm. So yeah, so I think you've referred, well, when we've spoken directly, but also within articles, to reinvesting or investing on multiple occasions with a
Yeah.
developer that's proven their worth. But
Yeah.
perhaps for people that are maybe coming into this space for the very first time, maybe previously have done a couple of buy to lets, or maybe they haven't. They've suddenly got some money that they've either taken from divesting a share portfolio or whatever, an
Yeah.
inheritance into directly investing with a developer. And as you say, Helen, that there's so much in this marketplace in terms of promotion via educators or from developers directly these days. There's an awful lot of social media activity
Yeah.
directly from developers using all of the tools and techniques that are easily available now, for marketing projects and marketing themselves. And there's some quite sophisticated marketing that goes on now,
Yeah.
online. So, what so and on the back of that, obviously there's this, I could say, there's a temptation to want to dive into the big stuff before you've cut your teeth on some straightforward stuff.
Yes. Yeah, there really is. And I think you're right. Like social media, it can be a bit double-edged. It's
Yeah.
great for developers and it's great for investors, understanding what people are doing and building a story, building a relationship kind of with the audience or who you're trying to get your message across to. But as with all social media, it's one side of it's one side of the equation. So to be honest, the people that I like in the property world on social media are the people that tell both sides of the story. It's not always, we're great, we're smashing it, we're winning these awards. It's like, you know what? This is tough. Have you seen what's happened to material prices? Unexpected shocks. This didn't happen. This fell through. This vendor pulled out, or that we'll talk about the challenges as well, because talking about the challenges doesn't sell courses
No,
generally, does
no,
it?
no, that's no, absolutely. Yeah, yeah. Yeah, yeah. It's along the lines of if it consistently sounds too good to be true, the
It
likelihood
is.
there's yeah, the smoke and mirrors type. Yeah,
There's a lot of smoke and mirrors. There's still a lot of smoke and mirrors, even though, yeah, I've been talking about it for a long time. And again, I think this was definitely in one article. I just take everything you're told, all social media, and certainly at the beginning when you are building that relationship with the developer, take everything with a pinch of salt. If it can then be backed up by evidence, by speaking to previous investors, by speaking to like the wider network, not just people that they want you to speak to.
yes.
If those claims, those achievements, it can be verified elsewhere, then you can start to be a little more trusting. But it's I'd say, some people call me cynical, but I find that's the safest way to be when you're putting a lot of money on the line.
Yeah,
Then
quite.
you really have to be. It's your money at the end of the day. It's up to you to do that due diligence.
So when you invest with a developer, and obviously you can, I think you've said previously, or you said to me previously years ago, you had done or have done in the past sort of crowdfunding type
Yes.
investing, which obviously can be, relatively small sums of money, and lots of
Yep.
people are doing that, and lots of people have been doing that consistently and successfully over quite a number of years now.
Yep.
Um,
Yep.
but of course, and there's safety in the crowd, isn't there? But also,
There,
to a degree,
yes. There is, and that's exactly as you say, that's how I got started. I can't remember what my first deal exactly was, but it was around about £1,000. Like, you can dip your toe in the water, and I think that's a really good way of
yeah,
getting started, whether it's through crowdfunding or whether it's with a developer, kind of directly.
yeah,
But crowdfunding, as you say, gives you access to do it at those smaller, less kind of substantial amounts. And it's a good way of learning about the whole process,
yes,
about what's involved, about what can go wrong, about the type of questions you should be asking, about what other investors are doing. And also you get to see if the developer delivers what they say they will deliver. And I've had numerous deals that have gone superbly, still friends with those developers, still invest with them to this day. And I've had a couple of absolute clangers as well. And thank goodness I only put in small amounts, because again, there's several examples of where the social media and the story and the smoke and mirrors was all there and it was
yeah,
great, but actually the ability of that developer to deliver just wasn't there. So thank goodness I did that through crowdfunding, and it was only small amounts.
yeah, no, quite. Yes, sometimes small is beautiful is a good analogy, and as you say, depending on the platform and
Yes.
the due diligence of the platform as
Yeah.
well.
Yeah.
That's also key about who they bring to the table. Um,
Yes,
and,
absolutely.
yeah, so that's another thing maybe that people need to consider.
Yeah. And the only thing I would say about on my like slight kind of caveat about crowdfunding, it's not about the platforms themselves or the projects, is that sometimes people themselves will kind of outsource their due diligence. They'll put all the responsibility for the due diligence on the crowdfunding platform. And obviously they do their due
Yeah,
diligence and they can go to a certain extent. But if it's your money, I've said it once already, if it's your money, it's your responsibility to investigate that, to do as much background work as you can. Don't outsource that to any platform, to anybody else. And that's the only bit I don't like about crowdfunding, that people are like, oh, well, they're doing it. Oh, all these people have put money in, so it should be okay.
yeah.
There's no guarantees. That it's on purpose that there's small print in
Yeah,
these things that say it's up to you to do your due diligence.
absolutely. Well, in old school terminology, it's your signature on the checkbook, on
Exactly.
the check. And yeah, it's all very well quoting safety in numbers, but a herd of lemmings going over a cliff isn't necessarily a good crowd to join.
And we've seen some of those, haven't we, sadly?
Yeah,
So,
no,
yeah.
absolutely. No, I mean, without naming names, we know of a number of individuals
Yeah.
that have unfortunately taken people's money and not applied it in the right way, and those investors have suffered accordingly. Okay, so yeah, some words of good, good, yeah, some words of caution, understandably, because as at the end of the day, once you press that button and it's gone from your bank account into the developer or through the intermediary or through the platform, then getting it back can be a costly, difficult process sometimes. Yeah, yeah.
Really can.
So you've already hinted at a few things, or you made some comments. So what typically do you look for in when as an I mean, I think with a developer themselves, I mean, we talked about social media and how, and I completely agree with you about the you want to see the warts and all
Yes,
side of people, rather than everything's great, everything's wonderful.
exactly. Yeah, you want to know that somebody will be transparent with you
Yeah,
and has that ability to see, and basically they're in touch with reality, because honestly in this game, and you know better than me, Richard,
yeah,
some people aren't necessarily terribly in touch with reality.
no,
It's all rose tinted
yeah,
glasses.
absolutely, it is. Yeah, yeah,
And I love that. I love, a developer needs that they need that ambition, they need that self-belief. But as an investor, as a private investor putting money with that person, you need to be able to discern how much of that ambition and that belief is grounded in reality, and how much it kind of is it wishing, is it hoping.
yes,
And
yeah,
that's the key, that's the critical kind of key point, and that's not as easy. I wish there were classes on exactly how to nail that and identify that. It's not quite that easy. It comes with experience, and actually it's why I do things the way I do them, is that gets easier to discern the more time you give yourself. So the more you watch somebody, you watch them on social media and see, are they telling both sides of the story? Watch and see how their developments are going. Watch and see how unhappy or happy their investors are. Watching somebody over a period of time shows everything. It really does. You can hide things, you can mask things, you can put on a brave face and have those rose tinted glasses on for a certain amount of time, but time will reveal all.
You can listen to more podcast episodes at pincast.co.uk or find them on all the main podcast platforms. You can read all of Helen's articles via the link or at property-investor-helen.co.uk. property-news.com. To learn more about subscribing to Property Investor News magazine and get the monthly print edition direct to your door, go to property-investor-news.com.
And that's why I tend to, I'll meet somebody, I like them, the project sounds great, and I might invest a small amount and we'll see how that goes. And then if that goes well, then we'll go on to bigger things. Time is your friend in this context.
Yeah, no, absolutely. I mean, that's the same principles that I apply when with magazine interviews with people.
Yes.
I tend not to sort of go with the latest person that's suddenly sprung out of nowhere and is being highlighted in certain communities as a literally as a one-hit wonder, or a particular strategy that all of a sudden is just a reinvention of something that's been done in a different for years, but they've got a suddenly a claim to fame.
Yeah.
So I tend to look for time-proven people have
Exactly.
shown their
Well, we've seen that as well, haven't we? As you say, people come out of nowhere. They're the next hot thing. Everybody's talking about them. There's all the buzz. They're doing this. They're winning awards. They're all over social media. But is that sustainable?
Yes.
Sustainable, like in an ESG sense, is very kind of topical, and it's something people are really focusing on. But sustainability is deeper than that. If you're giving someone your money, and generally in development, these projects are longer term, they're going to have your money for a while. Is that business, as well as the project, is that sustainable? Can they keep going? And it's definitely something, you're asking about what I look for in a developer. It's definitely something I look for. It's a very different skill to run a business and to deliver a project. Can that person do both? Because if they can't run a business, then that jeopardizes the money in the deal. And again, I've seen this. Fortunately, I've not been on the bad side of that, but I have seen somebody was great at developing. They could find a deal, they could get the angle, they could get it built, but they couldn't run the business. They couldn't keep control of costs, and ultimately that's what jeopardized all their projects, and investors got hurt.
Scaling up, as you say, that's where people and you referred already, the developer mindset. Many of them are very ambitious, very driven. Yes. Very focused, laser sharp mind and focus on, but it's when people start to scale up, when they've got to delegate, and then their inability to run the business as well as multiple projects, and that's when it could all go.
And ambition is great, we love that, but it has to be tempered again with that reality. And again, we've seen this, haven't we? People will go bigger and bigger projects and running multiple things. Well, then exactly as you say, you need a great team around you. And juggling one project, is a big enough job. Juggling multiple in different parts of the country, even maybe, it's a whole literally different ball game. A lot more balls to keep in the air at once.
Yeah, absolutely. I couldn't agree with you more there. So, just returning to your whole approach to invest. I mean, is it more now direct loan as opposed to joint venture? Because obviously, equity type stuff can come with additional risk.
Yes, it's funny, and it depends. Over the whole time I've been doing this, obviously we've had different kind of risk environments, different interest rate environments. And when I started off, as we touched on with the crowdfunding, that was more JV, more like equity based deals. And what I realized, or what was happening kind of at that point in time, and we are going back to kind of 2015, 16, around that time, is that because the ambitious, shall we say, rose-tinted glasses quote of the expected time frame, because that wasn't met, the time frame ran way over, which it's property, right?
Yeah,
That's
no,
not
fine.
uncommon.
Yeah.
But because of that, the expected returns that you were getting on equity, which were projected at kind of, decent 25, 30, often more than that %. But if you're diluting that over, if you're expecting that in a year, and then it suddenly becomes 2 years, or 3 years, or 4 years, or ad
Yes.
infinitum,
Yeah,
in
quite.
some cases,
Yes.
then your returns are decimated. So you've been taking equity risk on your money, which is much higher risk than if it's secured against, if there is an asset underneath it, if it's a loan type, that type of security. So I'm getting loan or even less than loan type returns and taking very high risk. And at that point, I could see there's this mismatch. I'm getting not fabulous returns and I'm taking this risk. And it's like, actually, I could be taking this risk and I could be getting these returns. I'm like, that works for me better. So that's when I did a big switch over into much more loan first and second charge lending. And I have to say, I've done some JVs recently, but me at my stage of life, it's just much more important that that money is secured. We talk about it on our Sunday chats with Adam Lawrence. It's return of capital before return on capital. That's what's important to me at this stage of life. So, and that's what I get, or it's what I'm more likely to get in the case of a loan. There's security, it's asset backed, there's something I can chase. So that's my approach now.
Okay. And what would you say in terms of, the developer, it's going back to, what are the sort of red flags that come up fairly typically with because you're as you say, you're doing, you've done the TV programs and so you're the judging of the awards as other examples. What are those red flags that makes you go, oh, seen this before? Yeah, buyer beware.
Yeah. I mean, we've touched on one of them already. Ambition, we need it, but where it's lost touch of reality, where somebody is promising you the world and they can do it cheaper than anybody else, they can do it quicker than anybody else, and the self-belief has gone into almost like aggrandizement, that there are a lot of narcissists in this world. Yeah. So you really need to watch out for those type of those are huge red flags. And another way you can identify that is by asking somebody, and I always ask my developers this, like, what has gone wrong? What's your biggest disaster? What's your biggest regret? Put them under a bit of pressure to see, will they answer the question?
Yes.
Because again, it's something I mentioned at the beginning, transparency. If somebody won't tell you and won't be open and honest about what their disasters are, and if they're in property, there has been a disaster. I'm telling you now, you and I both know that there has been a disaster. Will somebody be open and honest and tell you what that is? And actually, with a lot of my coaching clients, they're like, this has gone wrong or that didn't go wrong. How do I address that with an investor? I'm like, be honest. There's a way of explaining that. But if you have done everything within your power to fix that, to make the investor whole again, if you've done right by your investor, then that can actually be a way of building connection, of building confidence and credibility with your investor. So don't shy away from those conversations. And I like to have those early on, because you can see then how uncomfortable somebody is or not.
Yeah.
I remember one deal, I went up actually on a site visit to see the area of where this developer, his kind of niche area. And I questioned, it was very gentle, but I questioned if this was the right style. He'd gone for a real high design, super duper, some flashy architect, super duper, funky looking houses, but it was in a rural kind of area. And I asked, like, are we sure there's demand for this style in this area? What gives you that confidence? And he got very defensive. I just thought that was a reasonable question. That wasn't even me being, hard-headed, dragon's den, angel investor, like grilling down. That's a reasonable question to ask somebody. And his defensiveness, that I could question that, that was red flags from the beginning for me with that one. So
the look out for the ego has landed.
Ego is a very expensive hobby, as a previous podcast host told me, and that just stuck with me. And it's watch that, as we've said, everybody has an ego, like of course we do, and of course there are a lot of them in property, but is there more to somebody than just the ego? Do they have humility as well? Can they admit they're wrong? Are they prepared, to work with you? How do they judge, how do they value your money and what you want and your opinions? If they're not going to listen to you, and I am hands off. I'm people will ask me obviously now for advice and things, but other than that, I'm hands off. I like my developers just to get on and do their job. But if you have an opinion, will they listen to that? Will they give you the time to listen to your concerns, answer your questions, keep you updated? That's a huge red flag and something to ask at the beginning. Or will they just disappear, get on with it, and you're chasing to try and get information and updates? That's just rude, right?
Yeah, well, it's just bad practice, isn't it? I mean, you would expect a monthly update or the worst, a quarterly update, depending on the length of the project, but certainly regular communication and transparency as to what's going on.
Yeah, absolutely. And if you have those needs and you want monthly updates or however you want it, ask for those things up front. Get those things settled up front. Because then if somebody commits or they say no, they can't commit to it, then you can have that discussion then, and then you can understand if they're a one-man band and they haven't got time to produce a beautiful looking investor report with pictures and I mean, that's kind of understandable, but what can they give you? Can you have half an hour phone call once a week and they go through everything? I mean, personally, I'd get something written down, because if things do go wrong, you will need that information. So I would always get things written down. But how willing are they to work with you? And how willing are they to stick to those things that they agree with you? Because it's a bit, kind of a sales process at the beginning. The developer is trying to get the money in. They need to fund the deal. Of course they do. So they might promise you the world. And this is where it's really important to speak to previous investors. Do they promise you the world but fail to deliver? Because that's no good for anybody.
No, some great points there, Helen. Really, really good, strong points there for people to think about. You mentioned in the interview some 4 years ago about I think you referred to the rates and the rents, and we're obviously going into, because we're not running this on a script, but if people want to know about that, we can put the link in the show notes to that article about the fundamentals, in investing in deals. It's just
exactly, that's still absolutely relevant as it was 4 years ago. Yes, things have changed, rates have changed, but it's still relevant in terms of that's more actually when you're looking at the deal itself. What are you looking at? And if I can remember those things, because it's all so intuitive now, but what returns are you getting? Time is one of them, because again, as per the example, if you've got a return over 1 year, that's great, but by the time that extends to 2 years, then your return on your investment has halved. So you need to be, mindful of that and work out what that looks like. And actually the W in RENS is worst case scenario. What is your worst case scenario? Have that discussion, look at those numbers. What if I obviously, I'm a numbers geek. I like looking at a sensitivity analysis. If you're developing something and it's going to be sold, what happens if prices go down? What happens if costs go up? What if both of those things happen at the same time, which we saw during COVID, didn't we?
Yes, absolutely.
What does that look like? Where is your break even? And at what point might that project need more money inputting into it? You need to know that. And the developer really does too. The developer should definitely have that.
Yeah. Again,
Uh,
great points. Yeah.
There's things like exits, as we talked about, are you building the right type of project, the right type of housing for that market? And again, as we touched on security, what is the security? And that will depend on whether you're doing a debt, a loan, or an equity deal. What security is there? And I think we talked about PGs in that article. So yeah, we'll definitely add the link because it's all still super relevant.
Absolutely. Yeah. It may be 4 years ago, but the fundamentals are the fundamentals. And I think just what's happened, in that 2-year or so period with the pandemic, it just highlighted that nothing can be taken for granted. The student accommodation market, absolutely, with overseas students, developers. I mean, I did an interview recently with Ruth Hobbs and their project, and that's just just an example of something that was going incredibly well. And then all of a sudden, the tsunami of COVID and its impact on that marketplace absolutely turned it upside down. Serviced accommodation, the hospitality sector in that first year or so, which was a massive roller coaster. It went from bust boom to bust to boom. So anybody doing developments around that type of projects rather, would the strategy would certainly have gone through a bit of an emotional roller coaster.
Oh my God, totally. And I think actually, yes, we've all got horror stories from that time, whatever sector you were in. But that's the importance of the network and speaking to people, especially experienced people, to understand, kind of what happened, what went wrong, what couldn't have been foreseen that happened. Because again, I come from a risk mitigation, a risk understanding, risk background, but every project, there's something you're like, oh, I didn't ask that. I wish I'd asked that. Every single time, still all these years later. And
the checklist is constantly evolving, is it?
Oh, Richard, it started off, it was quite thorough to begin with. I'd say it started off 70 odd. Now it's about 200. Like, have we asked this and this and this? So it just grows with every project. But that's the beauty of experience and speaking to people that have been around a long time. We've seen it all. And even if we didn't experience it ourselves, we've got those connections, and we've seen other people go through things. And more importantly, we've seen other people, how they've got out of it. Or who they've connected with, who's helped them, who's got the answers to those challenges, to those problems that come up, because that's critical.
You can have all the experience, but at the end of the day, as you say, stuff comes along, and your ability to seek help, the old, no person is an island, and there are times when we've got to reach out and with development, absolutely.
It's what I really love about like our Property Sisters community. There are really experienced women in there, and kind of once or twice a week somebody will pop up with a really random, and I'm like, whoa, I've never seen this question. They're like, ladies, I've got this challenge going on. Has anybody else experienced this? Can do you have suggestions on how I can handle that? And everybody contributes and has something to offer, which is it's just so lovely to have that support network around you, because exactly exactly, you can think that this would be the best way to approach it, but actually taking input from other people, they'll have a different insight or a different perspective that you haven't got that actually could work out better.
Helen, thank you very much for your time. But the one final thing I must ask is how can people get in touch with you?
So I have a website, helenchorley.com. I'm most active on LinkedIn, Helen Chorley, or Instagram, Helen Chorley Investor. So give me a follow there. Got any questions? Yeah, just connect with me there. And yeah, then you can go and look at my back catalogue on Property Investor News magazine.
Indeed, absolutely. There's quite a number of articles there from
there's lots, yeah.
you put together with us in the last sort of 3 years or so. So great.
Yeah.
Helen Chorley, thank you so much for your time today. It's Richard
Always a pleasure.
Richard Bowser, Property Investor News. Thank you.